welcome back to the channel, and we're about to get into a quick conversation about money, a short video packed with gold nuggets and information here to help you level up financially. But before we do, if you haven't already, help the channel out with a like and a subscribe. Now in this video, I'm going to give you not one, not two, but 3 reasons why the real estate market will likely continue to fall further. Notice I didn't say crash, I said fall further. Now there are a couple of markets that are kind of protected from further falls or big falls. I would call that like that Washington, D.C., Northern Virginia, Maryland area because of all the government jobs. And then there's a small band of select universities that have 50, 60,000 students. Think places like University of Texas at Austin. Think places like Ohio State University, where you have so much of an economic engine created around the schools that it kind of protects those small areas around the schools. But for most other areas, you're going to see a fall further than what it's already fallen. Some areas, that fall will be small because the gains during the pandemic weren't that great. In some areas, the falls will be bigger because the gains in the pandemic were monstrous. I want you to think about places like Boise, Idaho, that just saw record-breaking growth in a 2 to 2.5 year period during the pandemic. They're going to see some sharp falls. It's fallen some, but it's going to fall even further. Now, let's go to the reasons now. The first reason why you'll see the real estate market continue to fall is that the buyers are simply running out of gas or out of gas. You have people that were trying to buy a home for 9 months, 12 months, 18 months, unable to find a home, getting outbid, and they were trying to purchase at the maximum level that they could purchase at. And now that prices have fallen, but interest rates have risen quite a bit, it's made the payment really not go any further down, and they're still out of gas. And some people are choosing to either just stick with renting and just figure it out later, wait to see what type of corrections the market makes, or they're even going one step further and doing multi-generational households. This has been done a lot in the Latino community, where you see lots of multi-generational households, and other people are starting to kind of join that to combat some of the housing issues. So the first reason is buyers are out of gas. Number 2, real estate is and always has been a business that goes in cycles. Now, if you've been in the business for a little while, like a real little while, like 2 or 3 years, you haven't seen any cycles. But if you've been in the business 10, 15, 20 years, you've seen cycles. You've seen the prices go up, you've seen them go down. And newsflash to people, before the pandemic, in most markets, prices had been going up for a few years. It was just going up at a nice, slow, safe, measured pace to keep the type of craziness that ended up happening from happening. But those prices were going up. And now we're in a period where for a little while, prices are going to go down. It's just a cycle. It's the way the real estate business works. It's going to happen. Live with it. Okay, so if you're one of these people that bought at the very top of the market, you will probably be underwater for several years before your property maybe reaches the point where you actually purchased it at, and hopefully it ascends beyond that. So the second reason is real estate runs in cycles, and it always has. The last reason, and this is one that people just aren't accounting for, the last reason is inexperienced rehabbers that just don't know what they're doing. So you had lots of new investors that were trying to play the fix and flip game, bought property at the top of the market. They were unable to get them sold. They made mistakes in their rehabs, stuff that popped up on inspections and appraisal reports. They weren't able to get them sold, and now they're stuck with these places, and they can't sell them at the prices they could have sold them at 9, 10, 11 months ago, and they're trying to figure out what to do. They're trying to hold out, but the whole time they're incurring costs, utilities, securing the property, taxes, insurance. All these costs are keep piling up, and you're having these guys lose some of these properties, especially if they were done via hard money lending. So you're going to have properties that are going to be coming to the market that are distressed. Distressed homes always help to bring a market down, of course, because a distressed home means that it is not selling at full retail value. It is probably selling at wholesale value. So the third reason is inexperienced rehabbers that are helping to kind of wreck the market inadvertently, but it's actually happening, so kind of advertently. So those are the three reasons: buyers running out of gas, real estate business runs on cycles, and inexperienced rehabbers that are helping to kind of disrupt forward progress in the market. Those three reasons mean that very likely wherever you live, unless you're in one of those select markets that has some type of protection method like government jobs or a supersized university to provide an economic engine to keep a local area going, you'll probably see some type of reduction in home values for a little while. All right, so that's what I got on this one, guys. Make sure you subscribe, like, share, hit the notification bell. YouTube thinks that this is actually the next video you should watch. Please do me a favor, follow YouTube's advice and watch this next video. And until I come back with my next video, I'm 100% gone, and thank you for watching.